Hi everyone, this is Victor from the Fifth Person. At Fifth Person, we invest in great businesses, be it for dividend or capital gain. My job is to help retail investors to do the same so that they can grow their wealth safely and consistently over time. So over the years, right, we have a lot of questions from our readers about investing. So right now, what we're going to do is that we're going to do a series of videos to answer all these questions, and hopefully it will be useful to you and also bring clarity to you as an investor. So my first question here is, as a beginner, I have a few companies on my list to buy, but I'm not sure what is the best time to enter, as there are noises that financial crisis is around the corner. Should I wait or should I enter if it is at the historical high yield, or should we always be entering the market when the stock is below valuation? The ideal case, right, to invest in a company or even enter the market is during financial crisis. But the issue here is that no one can predict when the financial crisis is going to happen. So it does not mean that during the normal time or during the overvalued time, right, there's nothing to invest in. There's always stock to invest in at different point of time during the market valuation. Okay, it's just that during the financial crisis, right, there's much more undervalued companies for you to invest. When it, at the normal time, it's much less, and when it goes to the overvalued time, there is much less also. So the key is, right, to buy into the company at the right valuation. So if I have a company that is undervalued right now and is traded at its historical high yield, which means that the company is undervalued provided the fundamental is still intact and is in the overvalued market situation, I will still purchase this company. Okay, so that's my take on this question number one, the best time to invest in. So let's move on to question number two. The second question is that I always puzzled about what makes up a good management team, because it's very hard to quantify how good a management team is and how to actually go about looking at this factor. Okay, so as an investor, right, we want to track the management behavior. Always remember, well done is always better than well said. The management can say a lot of good stuff, but if they don't do it right, it's actually useless. Okay, to me, a good management is someone who is very aligned with shareholder and someone who able to capture the opportunity when the time arises, which reflects their capital allocation behavior. So for instance, right, to the company you invest in, right, the management still pay themselves, let's say, a very high salary, right, when the company is still making losses. Okay, this is a very clear misalignment with shareholder. I personally like management, right, who actually strengthen their business during financial crisis. It really reflects their capital allocation behavior of capturing opportunity when it arises. And I also very favor management, right, who actually do share buybacks during recession time, because it's very, very beneficial to shareholder. Okay, so these are some of the characteristics of good management or factors that you can look at. Okay, so now let's move on to the last question. So the last question here is, I'm trying hard to find the extraordinary items that needs to deduct from the net profit. So extraordinary item can be found under the profit and loss statement, or sometimes you call the income statement. So they are usually items that are not related to the operating business of the company. So you have to remove them from the net profit. So they comes in many forms, like fair value gain, biological asset fair value gain, revaluation of property, or maybe impairment losses, interest incomes, and other incomes. So all these figures, right, you have to remove from the net profit so that you can get your true net profit figure. So that's it. I hope you enjoyed today's Q&A video. If you find this Q&A video useful, or you know of someone who can benefit from this video, please feel free to share with them. Likewise, if you have any question that you want me to answer, type in the comment box below and we'll choose the best questions to answer them in the next few videos. So once again, this is Victor Cheng, and I'll see you again.